Good morning, traders. How's it going, traders? I spoke to some people in the real day trading Discord yesterday, and it sounds like there is interest in me continuing to make these videos, whether it's, market analysis, whether it's talking about trade reviews, just things that come up on an everyday basis. So today I figured I'd provide some market analysis here, kind of go through some examples of prior market analysis I had, some current market analysis I have, and I can give one example of a trade I made today. It's only 10:44 a.m. So while I'm making this video, I'm still taking a look at various scans that I have running, seeing if there's anything worth taking a look at. Although right now I'm leaning towards kind of just sitting here, not really forcing anything, not doing anything. I will go over a couple things I considered, decided against, just some various things today. So, first of all, let's talk about market analysis. So, right now, as we know, we're in a highly news sensitive environment. I'd even personally consider it a bear market environment. I understand that there's a specific criteria in which um, that needs to be met in order for it to be considered a bear market. But to me, a bear market is a news driven market, a bull market is a capital driven market. So, bull market is, people believe in the market, people believe in the stability of the market goes up. Bear market, whatever is going on is causing sensitivity. People are fearful. They're constantly watching the news, and every little thing that comes out that it has the any kind of implication that it might influence the market responds to it, and then adjusts later. So that can be very sensitive. We saw things like that in 2020. We saw things like that in 2022, and there was even times where we saw things like that in the in between. Although those were isolated incidents. I'm thinking of things like when Twitter got purchased and someone created an impersonation account of Eli Lilly, posted that insulin is free now, and the algorithms that institutions use on their buy sell programs picked that up, thought it was real, sold the stock. Stock quickly made a recovery. I think either maybe that day or the following day when it was found that that was just a parody account. Um, but that those are isolated incidents. But you get my point. Bear market, news driven, bull market, people have confidence in the market. Market's generally going up. Maybe a few days or a few weeks here and there we get a dip, but those are usually bought up by the dip type opportunities. So right now, um, we're in a position where we're in a news driven environment, like I said. Like I mentioned in the last video, tariffs are causing a lot of worry. I myself, I feel like we all do, right? If you live in America, I'm not going to be as aware of how this impacts every country, although I do know that, maybe manufacturers that sell to the United States are going to be annoyed with dealing with the people that are purchasing from them because I've heard arguments going on where the U.S. companies are trying to get like for example, Chinese companies to pay for the tariffs. The Chinese companies are saying, yeah, we're definitely not doing that. We'd rather just sell to other people if you don't want to pay for this. And my guess, my complete speculation would be that the American companies are just going to eat the cost, but then pass it on to the consumer. So for us, the United States, we're definitely in a shitty position because we're all going to have all of our costs go up. Pretty much everything. I mean, almost all of our food products come from out of the country. I mean, it's probably more of an even split than manufacturing goods. I mean, all manufactured parts essentially come from overseas, steel, aluminum. I mean, it's not good. So the market is predictably reacting sensitively to that type of news. So bottom line, we can see that kind of market volatility in this kind of price action here on the daily chart. let me, that's too zoomed out. Yeah, it's okay. So, we got the 20 SMA. This is the 50. This is the 100, and this is the 200. It's it's. I mean, it's not good. I mean, we had the 20 cross all of them. Then we had the 50 cross the 100. Then we had the 50 cross the 200. And unless we start recovering, we're going to have the 100 cross these as well. And I believe that's something called a death cross. I don't exactly remember what needs to cross what in order for it to be considered a death cross. But bottom line is we're in a negative market sentiment period. That can be seen from the sell-off right from highs here back in February of this year. We really have not seen any kind of recovery. We tried to mount a little bit of a recovery. I think this was March. Yes, it was March. We rejected the 200, and we've pretty much never looked back after that. So what's my market opinion? Let's start with what I'm currently thinking. So I referenced this in the last video. This candle here is about a $50 range on SPY, 493 to 548. Yeah, that's over $50. So that's huge. Now, when you have a big move in the market, for example, even like a day like this, let's just pretend like this doesn't exist. I'll even move it over. So here we had a big rejection day from the 200 SMA. You're probably looking at the next day is probably going to be a bit of a rest day. This still has a decent range, but as you can see, it pretty much closed where it opened. Not really any kind of a significant movement on that day. I wouldn't be, going crazy here with anything. That's kind of what you expect to see. So the reason why that's relevant, I want to compare that to what we've seen the last couple days, 5 days after last week on April 9th, when we had that huge day. We've pretty much sat in this range. Today we gapped down only because of news overnight of increased tariffs on China, as well as some negative news regarding some kind of fine. I didn't look into it too much. I don't really pay an incredible amount of attention to fundamentals, but some kind of fine associated with Nvidia, something about 5.5 billion. So that's very significant, and Nvidia is a pretty large holding in the S&P 500, as well as the other indexes. Okay, so I just did a quick Google search just because I wanted to make sure I wasn't just talking out of my ass there. And yeah, Nvidia is the third largest holding in the S&P 500 at 6%, which doesn't sound large, but you need to consider that after the third largest holding being Nvidia, the next largest holding is Amazon at 3.7%. Then we get lower in the 2%, the 1%, and then not even a full percent in the rest of the holdings. And that makes up 500 stocks. So you got 500 stocks, only 3 of which have a holding of a percentage greater than 6%. So that's pretty significant. And when we see some kind of news come out like that, it's certainly going to affect the market. It also affected AMD, although AMD is not as large of a holding as Nvidia by any means. It's not even close. But yeah, so that's why we gapped down today. But what I'm expecting here essentially is until we get the next news catalyst, I don't expect to see any kind of a huge amount of movement here. So it's been tougher this week. Like I said in my last video, I made quite a bit of money last week just playing some day trades here and there, just finding some quick trades. This week has definitely not been as easy. It didn't help that I took most of the day off yesterday because I had something going on. But this week is definitely not as lucrative at this point. I can't predict what's going to happen next. But at this point, it's not been as lucrative just because when you've got these ranges here, which are large. Don't get me wrong; they're very large in comparison to what we were seeing earlier in the year. But still, it's the conviction in the moves in the market isn't as high. Let me show you what I mean. So, for example, here you know, ignore all the numbers on the side here and just look at the chart. I'm going to do that with this previous day as well. So just ignore all these numbers that tell you that this range is like $5, which back in January was a pretty large range on SPY. Just ignore that completely. Put it out of your mind. When you look at this, does this look like a price? Does this look like price action that you would look at and think, "Damn, there's a lot of money to be made here"? If you do, I don't know what you're doing. Maybe I should learn it because I don't see where the money's to be made here. I personally, and I'll get into my logic a little bit more later. I'll just mention it now. But I did take a short futures position here, and I just quickly sold it around here, just because I was just looking for a quick scalp. I didn't know if support would hold here from the open, and I was pretty confident that I would get that. Granted, obviously it moved even lower, and I would have made more money. But whatever, I'll get to that later. The point is that this kind of movement is not really conducive to making a ton of money. Um, you know, when you've got a movement like this here, this is a lot easier to make money on because I think I went through this on my last video, but when you've got kind of a lot of price action that gives you easy confirmation, being okay, we test VWAP, we reject VWAP. Okay, we test VWAP, we reject it again. That tells me I should really be looking for a short. I pick some good shorts. Maybe I short two things. Maybe I even short one thing. If granted, I know for a fact I would not have held it through this whole move just because I'm trying to be very conservative in this market. But if you did, I mean, that's a very nice move, and it was nonstop, red after red after red candle. I mean, hypothetically, you could just say, I'll stop out as soon as we get a decent close over one of these candles, and you wouldn't stop out until over here, which you might want to sell into strength when you see this increased volume on these candles. But regardless, you get my point. This is a move that you can make some decent money on. When you've got and possibly this, but you have to consider. I'll pull up these charts again. Let me just see what day that was. I didn't look. That was Friday, which was the 11th. Okay. So when you've got this kind of price action here, on the daily chart, there's two ways of thinking about it. You can either say that, okay, this means something, which I don't really agree with, and then you can say that it doesn't. This is a highly volatile reaction, maybe even an overreaction to a news story, and we're not done seeing the downside. That's my personal sentiment. So when we had Friday, when we got that big green move right there, right here, it was a pretty nice move all the way into the close. That's pretty decent. I did not have much faith in that. I would have to check my journal here. I don't know if I've got the numbers, or I don't know if I had anything long. Let me see. April 11th. Oh, I did actually. Okay, so I had some balls there. I'll go over that actually. Let me write that down. I'm going to go over that after I finish talking about my market sentiment here. Let me just write that down. Go over trades from the 11th. Okay, so bottom line is you want to be highly cautious, and anything you do, you want to do it with a very short horizon in mind because of this type of volatility. Now, what do I kind of already tried to get into this earlier, but I'm going to finish my point now. What do I think is going to happen here? Well, my sentiment is unless the entire landscape of the current economic problems we're in right now changes, we are certainly not out of the woods. So despite this massive, massive move off lows here from 481.8 all the way to 548.68, that's insane. I tried to look back in the past after this happened, and I tried to see has there been any time in SPY's entire history where we saw that kind of a move? And I couldn't find one. Maybe someone could comment and tell me about another one. Um, Partly, I believe it's due to the fact that the S&P 500 is worth so much more now than it was before, that the amount that it can move is much greater than it was before. I think that's a major component of that. So I don't want to say that maybe the sentiment was so strong, stronger than it's ever been before, that we had such a move like this. I don't know. I can't speak on whether that's true or not. But what I can speak on, this was a monumental move in the market. And it was truly an historical move. And still, I'm sitting here and I'm calling bullshit. I don't think that we're going to be getting out of the woods here. I think that, we're in this situation where the economics are not looking good. The sentiment is very negative. I mean, not that this is, the be all end all, but if you look at the CNN Fear Greed Index, even after this move, we have not even begun to exit the extreme fear sentiment on that on the metric they use. Now, I don't know the parameters they use. I don't know how they determine any of that stuff. So, like I said, that's not the be all end all metric of what we should be looking for here. But let's consider what I would like to see if we were out of the woods. I would expect that if the market sentiment shifted and now we're in a situation where the market believes that we're actually in the clear, I would expect to see, after a move like this, we consolidate in the upper end of that candle, which we kind of started to here, but now we gap down. So, maybe I could be wrong. Maybe we print a green candle today, it goes right back up here, consolidates, and we break out. If that happens, hey, I'm wrong. And that's okay. I can be wrong because you want to trade with your mind open a little bit more. So just because I believe in something doesn't mean I'm going to lose money because my belief is wrong. It depends on the situation, but in this case that is the case. So with this here, I would want to see it consolidating here and then break above. Now, what I think will happen, and I'm going to do my best to prepare for this by looking for shorts and being ready to enter them when I get confirmation and not before. I don't want to predict anything here. I want to react. It's okay if I get in during the move. I don't want to get in before, and I don't want to get in too far after. Getting in before the move means my risk is at the highest it could be. If I'm wrong, I take the maximum loss. If I'm right, I take the maximum gain, but is that risk worth it? In my experience, the loss, it will always be greater than the gain when you try to predict the market. So I'd rather just react. If I'm right about the sentiment and I react to it, I'm going to make money no matter what. If I'm wrong and I get in during a move that shows I'm right, so let's say we start breaking down here on significant volume, I short 3 positions, standard size, that are very relatively weak. And let's say the next day it fully reverses that move. I see that I'm wrong and I have to exit those positions. Because I entered while the market was dropping and I entered relatively weak stocks, any damage should be minimal. I shouldn't lose too much money, if at all. I've had times before where I was in strong stocks while the market was tanking and I was profiting. I was making money on stocks going up while the market was tanking. So, relative strength and relative weakness is a super powerful thing to use in that regard. But anyway, my sentiment here is that we're going to be going down. That's my current sentiment. Now, let me kind of go over some prior market sentiment that I had, just that I can remember off the top of my head. I can't remember everything that I have ever thought, but I can go over a couple things because, and not only that, but I can just give you some tips on what I look for to try to kind of gauge my sentiment. So let's talk about something I love to use in a bull market. So something I love to use, and you can see it a lot here actually, is I hate all-time highs. Now you're going to hear a lot of people say about all-time highs are great. You have no sellers above you. That's true for stocks, in my opinion. Because in the market, I think a lot of times institutions love to buy here, take profit when we hit the all-time high, and then reload, repeat, reload, repeat. So that's why I don't like all-time highs in the market. So what I like to look for is this. Okay, this was not an all-time high. Let's look here. So, for example, we had a bit of a sell-off here, a couple days, nothing big. Big buying. Great. Love to see that. This was September of last year. Then we got to this level, all-time high here, immediately rejects. What do I want to see at an all-time high? What's going to convince me to get long? I want to see this. Right here, November 6th, 2024. This is what I want to see at an all-time high. If I see this at an all-time high, I say, okay, we're going higher. I don't need to worry. I'm fine staying in all my long swings, and I'll ride it out. When I start seeing this, I'm out. That's when you want to get out. So, and the reason being is of what I have observed. Institutions, they get in here and they're taking profits up here. It's just a constant cycle of rinse and repeat. So, I really don't like to see this. This makes me very cautious because what do I expect? I expect something like this, and everyone loves to panic. You might be in the strongest stocks in the market that are showing the greatest relative strength possible, and then what happens? You get this kind of selling, which is so minor. It's so minor. It's a couple days. I mean, give me a break. I mean, when we've got drawdowns like we have right now, you got all these people on Reddit talking about, oh, well, when are we going to buy the dip? Is this the time? And it's like, when this happens, everyone's losing their mind. Like this is now the next drop. It's like you. Everyone's always so fucking stressed. It's like, can we please just have a time where we relax? You know, if there's no market sentiment, economic indicators are coming in strong, and everything looks good. Relax. I'm not saying as a retail investor you should buy here. Well, I can't speak on an investor, but as a trader, I'm not saying buy here. Like I was saying institutions are, but they have all these metrics that I don't have access to. I don't have access to any of their information. They spend billions of dollars on research. I don't have time for that. I'm just trying to respond to what I see the institutions do. So, for example, here in September, when this selling happened, I'm not buying here, but am I buying here? Hell yeah. Absolutely I'm buying here because this is we saw support right here right above the 100 SMA, broke above the 50, broke above the 20 a little bit, but the 20 is like kind of soft. I almost kind of look at it as an EMA, maybe a stronger EMA. I don't consider it as significant as the 50, 100, and 200. So if I see this, I'm like, I don't think, oh my God, it couldn't close above the 20 SMA, so I shouldn't take any long positions. No, fuck that. Just, I would be long here because I respond. That's what I was saying earlier. I respond to what I see. I don't predict. So, regarding market sentiment, this is bullish, obviously, but you want to look for these indicators. Reds here mean cautious. Don't add to positions. Don't take on new positions. Same thing here. And then maybe your stragglers that you still have in your account that haven't hit their stops yet. When this happens, maybe you're not adding, and maybe you're not taking new positions necessarily. Maybe you are, maybe a few. You don't want to put on too many if you're seeing these kind of things. But your remaining positions that haven't stopped out, when this market drifts higher on low volume, you can see the low volume down here, below average. When that happens, that's when you're going to take profit on them. They're going to hit your targets, and it's not going to be a problem. You get these longer red candles that kind of engulf the previous candle. Then, probably going to take a little bit of a pullback, barely at all here. Ended up being. Did I know that at the time? Of course not. So I prepared more thoroughly than just thinking it's going to be small because you don't know. It's impossible to know. But anytime we got these red candles, I'm feeling a little cautious here, a little cautious here. Anything off all-time highs. This, obviously, I said, super bullish. You see these stacked candles, that's when you're adding as much as possible. When I start seeing reds, that's when I start pulling back. I don't want to take big losses. I don't want to be in a position where I can't turn over my capital as fast as possible. During these periods of times, I have an incredibly high win rate. Anything from 80 to 90%, sometimes even more per month. So, that's why swing trading for me is ideal. When you've got these smaller ranges, which you can see here, 576.73, 571, it's a $5 range. As you can see on this chart here, it looks huge. Looks huge, right? Don't ignore this for now, but it looks big compared to all these candles. Looks very big. Compared to what we're dealing with right now, it's nothing. So that should give you some idea. I don't really day trade too much when we have these kinds of markets because it's just not worth it to me. I can make, I made like, I can just tell you this. I made, I think if I'm remembering up correctly, 15 to 18% return on my account in January of this year. That was solely swing trading. Now, does that mean that if I took a stock, said, okay, here's my target, and it somehow hit that day, um, that I still say that's a swing trade. Why? It's because I went in with the intention of it being a swing trade. I didn't go in with the intention of it being a day trade. But a lot of the trades I'm taking now, they're day trades. I don't want them to be swing trades. I don't let them be swing trades. They're completely day trades. So that's the difference for me. Maybe I do get out of it in a day on a swing trade, but I still say it's a swing trade just because that's my complete intention, and I don't have any other intention. But hey, if I get the profit that day, if it let's say I went long here, said I want to exit here, and I got that in one day, I'll take it. I mean, I'm not gonna say no. But anyway, you see where I'm coming at here. So just for example, why I always am so cautious at these reds at all-time highs. You can see that here. We got up to this new all-time high here. We put in a little bit of a wick here, and I said, okay, I'm cautious. So that what that means is when I see this red, I'm not adding to anything. I'm not adding anything to anything. Green, okay, maybe I added something here. But still being very cautious. Boom, 1218. Boom. Yep. Sure enough, we get that big selling, and I'm not in anything. I did fine. December was a good month for me. So that didn't affect me at all. Sure enough, I was able to wait right through that just because I didn't take on too much because I saw that the signs start to form there and I didn't, I was able to get out of there. So sure enough, we get a big engulfing. I definitely took some longs into here, some more selling. Probably didn't hit any of my stops. I don't know. I don't have the month in front of me, but I know it was a good month. I must have done something right. And same thing in here. Let's see. Was that all-time highs? Yeah, it was. So when you're getting all-time highs in here, same story. You got the reds from the all-time highs. That tells me there's not a lot of strength. This green here, I'm adding. This red, I'm cautious. Same thing here. We got to about the open of that candle from 124, 2025, and we sold right off. That tells me danger, danger, danger. Into February, I did lose money because I don't remember why exactly. I think part of it was my stop management, which I'm planning on changing here. And then other part of it was I wasn't as confident in some of the positions I was taking. So I actually took less positions than I should have, which ended up costing me money because I actually would have made money if I got into all the positions I should have. But bottom line is, this was a tougher month for whatever reason. Maybe the smaller candles here, less room to move. I don't know. Regardless, losses happen sometime. Sometimes you'll lose money in a month. The goal is over a 12-month period, beat the market, make money. That's the goal. If you can do that, you're good. Okay, so going back into that, we got another rejection close to all-time high. This, very deceptive because when I had this, I felt good about this. Why wouldn't I, right? The volume not necessarily there, which is another factor. A lot of people do a lot of volume analysis. Sometimes I think it's kind of arbitrary. I don't know. I do it a lot more on day trades than I do on swing trades because I don't know. I feel like sometimes the volume creeps in and then, maybe you had a good entry on the daily chart, but you didn't take it because the volume wasn't there, but then it makes a nice move. Are you really going to miss out on that? I don't know. Maybe I'll change my opinion eventually, but right now I don't really look at volume as much on the daily chart. But A lot of people would, and they'd say, this is a float higher on low volume, which then would cause you to be cautious, which is not necessarily a bad decision. Instead of looking at volume, I would look at the size of the candles. That's how I would judge it. These candles are super small, not very big ranges. That tells me maybe people are cautious. Then we get this candle here. Sell off. Big candle here. At this point, you should be considering taking profits on everything. Let me take a look at what I did during that time. Do I have it set for that? No, I don't. Let me set year to date on here. Because I'm just curious. I don't remember how I played it on 224. 224 to 2. I had SPY short. I didn't take anything on the 24th besides that. The 26th, I took a day trade on Amazon long for peanuts. I was trying to play a bounce like a dipshot. Oh yeah, that was another part of the reason why I struggled a bit in February, was because I was trying to time a bounce that was non-existent. See, I do this for a living, and I'm still making fucking dumbass decisions, because that was 2 months ago, not even, really, and I'm sitting here thinking, oh, I'm smart, I'm going to time something. Sometimes you get, like, the gambler's itch or the gambler's mentality creeps into your mind, and you think that you can do something that is just not even possible. So I ended up losing some money there. I did make it back pretty quickly, but ask yourself this. If you got to make back $2,000 to make, I don't know, 4 or 5 in a month, what if you didn't lose that 2 grand? Now you make 7. So it's like, come on, what are we doing? It's so annoying. It's so stupid. Oh shit, the market's making a good move here. Let me see if this is worth trading on. How's the volume? Let me see. That volume doesn't look too great. We got 1 OP in our favor here. It really depends to me on how it reacts at VWAP here. Because if it bounces like it is here, I don't want to mess with that. Because we've already had 1, 2, now I'm going to be 3. Oh, if you don't count these. If I had like a red that went from here to here, I would have shorted it, maybe targeted right here just for a quick scalp. Let's see, it's 11:17. Let's see, I'll wait 3 more minutes. I'll look at it on my other monitor so I'm not boring you guys. What was I talking about? Oh yeah, I was talking about the stupid things I did in February. But anyway, so I was talking about market sentiment and I want to go over some trades. Okay, so bottom line is, I think you guys kind of understand the way I look at things. I try to look for significant candles, and if I see a significant candle, I will pay attention to it and I try to give it some respect. So, this is a significant candle, so is this, so is this. I would say this is pretty significant here. This is very significant. This is significant. And then obviously this candle, I don't know. This candle to me is more significant than this candle. This candle is kind of like an absolutely insane, delusional, psychotic volatility candle that makes absolutely no sense to me. Although it does make sense. I don't even remember exactly what the news was, but it did make sense. But in the same vein, it really doesn't. Just because it's not going to improve. The conditions we're in are not going to improve. So like this big move here, which God knows how many billions, hundreds of billions of dollars were needed to make that move. It's like, okay, if I was an institution, I would be, yeah, sure, I'd play the move, but then I'd be selling at the end of the day. I don't know if they did that in the after hours. I don't remember. I mean, clearly you see a gap down here the next day, so I guess that is what happened. Anyway, I said I would go over some trades. Before I forget, I said, what day did I say I was going to go over? Go over trades from the 11th. Why did I say that? 4/11. Oh, yeah, okay. I remember that now. So the reason why I wanted to go over trades from the 11th was that was some ballsy stuff. So the reason I did that was I thought my sentiment at the time was okay, we got this big bounce. Probably going to have some rest days here. We'll probably test the 20 SMA and we'll go back down. With that being said, let me find something that will work in testing the 20 and 20 SMA that I can make some money off from. So here's what I did. So first, I need to pull up the first long. I went long Berkshire Hathaway, B shares, not crazy. So 411. 411. So okay, so here it printed an inside day. I have a scanner that looks for those because generally those kind of continue the trend. And I said, okay, I'll go long if it goes above that candle. So, or this candle here, the 410 candle. So I went long like right here and I sold it, I don't know, somewhere around here. Let me look. 524.84. 524.84. So it looks like I was just going for not necessarily a full gap fill, but a gap fill on the tail here. So that wasn't much, made like a little bit, $3 about per share. Nothing crazy on that one. My next one I did, so at the time I had, okay, so let me just pull up NVIDIA. So at the time I was comparing the SPY chart. Let's compare really quick. So I just want to compare to see. Okay, yeah. So if you look here, it's subtle, but gotta have an open mind a little bit. So these red candles here, if you look, are definitely smaller than the ones on SPY. It's definitely a less of a significant move. So to me, I'm looking at NVIDIA, I'm thinking, okay, maybe there's some strength there. So on, let me see here. On April 9th, which was this big day, I sold the 113 strike puts on NVIDIA expiring that Friday. And then on the 11th, I thought to myself, I was in profit on those puts by 50 cents. And I thought, I'm going to get assigned on these at 113. NVIDIA is having a good move, as you can see on the 11th. And if I hold these, my buy price is going to be 113, and then I'm going to have a maximum upside I estimated at 114.24, which isn't much. So I thought if I sell those, or if I cover those short puts for the 50-cent gain and I buy the stock right now with the amount of shares I would have bought at the 113 strike, I would make more money if I just play the stock right now. Now, I think at the time I just kind of ran that math in my head and I didn't really think about it too much because I think if you actually run the math for what I just said, that's not true. Capping out at 114 right here. I don't believe that's correct actually, but it ended up working out that I was right just by some luck, kind of. So I bought NVIDIA on 411 at 111.38. And then I got a text from someone on Sunday night as I'm chilling, about to get ready for bed. And they said, oh, NVIDIA is running. And I'm like, oh, shit. I'm like, I have NVIDIA, and now you can trade 24 hours. So let me take a look at that. Sure enough, it was at 115.85, and I said, damn, that's much higher than I was planning on selling it at. So let me take that. So I sold all my shares at 115.85. I made more than $4 per share on the position. Let me see right here. I made $4.46 per share. So that ended up being a really good trade. And that's how I played the market on 411. Those are pretty aggressive moves, but that was my thesis. Okay, hold on. 1:24 p.m. Okay, what news do we have here? It's got to be news related. Reload. I'm just looking to see if I can take a trade here. Russia, Putin, China, grandiose plans in space. Who cares? GDP now, model estimate, real GDP growth, rate. First quarter is 25 times, negative 2.2%. Wow. What the fuck is causing this move? If it's not news, then I might have a trade here, but I don't want to take it if it is news. Fuck. I don't know if this is a good idea. I got fucking 3 seconds. Markets some move up, but that's not helpful at all. Okay, it's too late. I missed it. I guess hindsight will tell me if that was the right decision or not. The problem is this. Okay, here's why I'm looking for news. If it's news, I can gauge whether it's relevant or not. If it's not news, that's important too, because then I know it's just market sentiment or price action or whatever the fuck. But if it could be news, which I think it could be, because this is a pretty big move. I don't want to get, into a reaction that was overblown and then get sold off. Let me see where pivot points are. And that came right up to a pivot point pretty much. 535.27. Yeah, it's right there. So if I was going to get into this, I should have gotten into it right when that candle closed. Oh well. Okay, let's go back to what I was saying. Oh yeah, I wanted to go over. Let me just pull it up on MES. So, oops. The last thing I want to go over here, just to make it complete. I see here now it says market volume pop to highs, no specific headline for move. Thanks, that's really helpful. Actually, that is helpful, but it's too late. If I had that information a minute and a half ago, that would have been more helpful. Let me think. Oh yeah, the last thing I want to go over is the futures trade I did today. So basically, super basic, not really anything complicated here. I had a negative sentiment from overnight news. I saw this pop on the open. I thought, bullshit. This sells off. Not really enough for me. I see this red candle. I'm like, all right, I'll get in. I got in, sold about here. Like I said earlier, didn't really want to get out too close to support because you never know. So that's bottom line what I'm looking at here. So in conclusion, just to conclude this video with an actual message so I can get a point across. In conclusion, my sentiment is I think at most we're going to test the 20 SMA. If not like already we've kind of pseudo tested that level, then we're going to sell off further. That is my current prediction. That's what I'm currently basing my analysis off from. Am I entering any positions now based on that? No, I am not, and I would not recommend anyone do so. I am waiting for the right opportunity to enter positions. I don't know when that's going to be. It could be this week, could be next week, it could be the next week. I really don't know. Until then, I'm going to be taking quick day trades, scalps even. Okay, so sorry about that. Obviously it's the next day based on this chart here. You can see I messed up the outro of the video, so I'm just re-recording this. But bottom line of my market analysis, you can see that what I'm predicting is, we may have a bounce up to that level, or maybe the bounce already happened up to that 20 SMA level. We're probably going to be looking down. I'm focusing on day trades only for the most part. Any kind of swing trades I'm taking are just pissing me off, and not really a good position to be in. I feel like I'm on in a disadvantageous position here, so I'm trying to avoid that. So, bottom line, I'm focusing on day trades. I'm focusing on the short side of the market. That's where I think the money's going to be here. And good luck out there. Hopefully you can trade this market. Hopefully if you're learning, you can work on paper, learn how to trade a shitty market so that you can have some fun in a good market. Good luck out there.